It's Wednesday, that means it's time to look at some DeFi charts for Brave New Coin. We'll start with the DeFi perp, and we've swiftly gone from the potential possibility of higher highs from October, November to just straight Goblin Town, straight to the core. Everybody loves to sell at the same time on the same day, and part of that's liquidations, obviously, part of that's leverage in the system, but we've now broken and held below the 200, the cloud, and VPVR or volume support resistance levels, currently resistance. The last major support we have for the range is where we bounced between 8 and 8.5. After that, it's 5. That's the next support down, and then after that, it's the January open, which is all the way down at like 3 or 4. So if you're bullish into Q1, you have to hope that this low holds. Because if it does not, which statistically it should not, we are below any support we need it to be above to be bullish, there is an expectation for lower lows. Now, does that mean immediate lower lows to 5K? No, it does not. There are some silver linings on a few of these charts showing bull divs. We're pretty far away from the mean for things. In the near term, a bounce is, I'm not going to say probable, but possible. A bounce back to the mean. We're not talking a bull reversal bounce, which would be above 12.4. I'm just talking something on this chart to 10.8, 10.3. The mean is somewhere in here. That's still below the cloud. It's still below the range or in the range. Now this could, here's the other branch in the decision tree. This could just range for a quarter, range for 2 quarters till it figures something out. But the swiftness at which we lost the range high does not give me high hopes for Q1. It tells me people could not wait to sell up here. They were so excited to sell up here. Nobody wanted to buy. More people wanted to sell. And here's where we are. Now, I wish I could point to fundamental things like issuance and inflation of tokens and say, aha, I've got it. This is the key. Aave's at 1.4%. So that looks like a better buy than Balancer at 16, Convex at 52, Curve at 14. It does not line up like that. Curve is one of the more bullish charts, more neutral charts relative to everything else. Sushi had a C-suite rage quit exodus, and it's at 6.7. Am I supposed to be bullish on that? It bounced. We'll take a look at the chart, but I don't think it looks any better than it otherwise would have. Comp looks abysmal. Balancer looks abysmal at lows here. Now that starts to line up and tells me, yeah, issuance is high. They're paying to onboard people. Whether or not that's working is another story. Synthetics hemorrhaging users, hemorrhaging on-chain activity at 8% inflation. But my point is, I wish this lined up with technicals. I wish Sushi having a low PE ratio made sense with technicals. Doesn't matter. Uni doesn't matter, right? Uni's at lows. Uni looks abysmal. SNX, now this lines up, probably just coincidental, also looks abysmal. Curve, like I already said, neutral. Bancor had looked okay, not so much anymore. Balancer looks like it's going to push all-time lows. I don't think that's a question. Maker looks decently okay. But how I would stack the technicals of the charts I'm about to show up do not match fundamentals whatsoever. The biggest thing that seems to matter is ETH fees. If ETH fees remain high, DeFi on ETH will continue to flounder. Thus far, that seems to have been the highest correlation. Look at BSC, look at Cake, PancakeSwap. I believe those are doing much better than DeFi on ETH. Even look at Solana with its issues, AVAX, Terra Luna. Fees seem to be the rate limiting factor for bullishness or bearishness. Maker, we had been tracking this diagonal support. Currently the farthest below it's been since 2021 rolled over. 5200 cross, flipped bearish again. Now, admittedly, trend metrics become less useful, less valuable, less powerful when we are ranging. Even still, this looks like a descending triangle. This looks like a head and shoulders. It does not look bullish. This is not good. We're breaking below VPVR support. The next support down's at 15. So on all these charts, like I said, there's a bull div starting. Is that enough to save these things at lows? I don't think so. You can say a comp is down 60% or whatever it is from the 200-day touch in November. incredibly swift, just no buyers, only sellers. Everyone loves to sell on the same day. Like I said, it's astonishing how it works out. But this is back in VPVR support. Would I want to be bullish down here? No. Can I be wrong and did this thing just V-bottom back to 300? Of course. Is it incredibly far away from the 200-day moving average? Yes. It does not look like something I'd want to take a stab at this point in time, especially going into Q1. I wish the calendar didn't matter, but again, that's another thing that seems to matter. Call it futures contracts, call it natural human psyche, I don't know. But going into Q1, I just can't be bullish on this stuff. Q4 2020 looked much different than we do here. Q4 2020 for DeFi collectively looked like consolidation, even at the time, obviously in hindsight, but Q4 2021 does not look like that at all. So, you know, I like 150, I like 130, I like all-time lows for comp. Just let it die, let it continue its descent, because when you see a multi-week bull div, even let's go multi-quarter, right? Let's go multi-month into Q2. Let's bottom in Q1. Then I can get bullish again based on seasonality. But how this sits here is terrible, abysmal. Aave also breaking all sorts of lows here, multi-month lows. The next support down is basically sub 100. I'd say 80. If 80 doesn't hold, 50. Bearish 5200 cross. Again, this has crisscrossed over and over and over again. But it most certainly hasn't been strictly bullish since the recovery in May, June. So even though Aave has a 1.4% inflation rate, even though Aave is on the left side of this graph with a PE ratio of 5, has not seemed to matter whatsoever, at least yet. Sold off with the rest of them. SNX also multi-month lows, breaking yearly pivots here. This is KuCoin. Next support down, sub $1, sub 2. We'll see how deathly this gets. SNX previously only had single collateral. Now it's got ETH as collateral. So I don't know how much puke we will see, but as single collateral loans get liquidated, that puts pressure on the existing loans to shore up collateral or also get liquidated. And that's why you tend to see these crazy downwicks on something like SNX. So we will probably end up bottoming when you see a wick sub $1 on SNX. Now that may be a week from now, maybe 2 months from now, I don't know, but that's something to watch for when all hope is lost, because there is no spark of bullishness on this chart whatsoever. Uni also making multi-month lows here. Not a good look, seeing as support all the way down at 370. It does have just a continuous bull diff here, lower lows in price, higher lows in RSI. Has the most trading volume for any DEX on ETH, doesn't matter. Highest protocol revenue on ETH, doesn't matter. Like I said, I wish it did. I wish fundamentals mattered to some degree. Now, Uni and Sushi, fundamentally night and day. Can you spot the difference in the chart? I cannot. They both are basically as bearish as one another. Like I said earlier, Sushi's got some C-suite drama, governance, exodus, whatever. Cool, right? That doesn't matter. It still looks just as bearish. Can all this stuff mean revert? Like I said, sure, but that's not, as a non-range trader by preference, this doesn't excite me. Some people love buying lows in a multi-month range and just trading that. I'm not a fan in general. Curve only doesn't look as bearish as everybody else because it popped up so high. It's still above the 200-day moving average, but it also has pulled back significantly from those highs. Over 50% from the highs now. But as trend metrics go, it looks decently okay here. Certainly better than most everything else. Balancer is just completely obliterated continuously. Unable to breach that 200-day moving average a couple times now. At the highest volume level on the chart by price. So it's very much a do or die situation around this level. Now, ideally, you get some sort of multi-week bottom something, ascending triangle, Adam and Eve, inverted head and shoulders, anything. A bull div, right? No bull div just yet. So it's too early to look for bottoms, I think, on stuff like this. Needs more time to get full of despair. BNT, I had been decently bullish on this, hence why it was in the Enzyme portfolio, why it survived the culling but it did break below the triangle here, broke below the 5200 EMA. We got a death cross here, did not break 480 or whatever the horizontal is at that point. And this point, downside, certainly more likely with growing support, $2 on down based on this previous consolidation. No bull div just yet. ZRX, same story, although sold off significantly quicker than BNT, breaking monthly pivots here. No real volume support until 40 cents, probably finds some support if this keeps going around 50 cents. But this pattern certainly got rejected at this point. 1 inch popped up in October, has completely sold off entirely, that entire rally. Death cross below the range that it needed to hold, below all of this volume. Certainly does not look bullish here, with basically the low in July and the volume level at $1.20 as the remaining two supports here. Certainly not a bullish chart by any means. Link, this is the 2-day. Any way you want to look at any of this stuff. Link, BNT, ZRX, all the same reasons to be bearish. Had a multi-month pending ascending triangle, broke down, broke the 200, broke the multi-year range, rate of change, broke everything it needed to hold, and does not look bullish here on trend. That's just all there is to it, really. No bull div just yet. Really no hope on that one. Wi-Fi also broke the range, below the 200, below the 50, below VPVR, below any support that it needed to hold. And again, I wish the buyback and burn stuff mattered more. I wish BNT's buyback and burn mattered. I wish Maker's burning mechanic mattered, which started in November. Hasn't seemed to matter yet or kicked in. That's just a non-factor here so far. It may kick in the next couple months for a lot of this stuff, but this is not. I think Wi-Fi is fundamentally worthless anyway, but on the technicals, it's also not bullish at all. Again, maybe bull div here, but certainly not a buy in my book. One of the few things that looks decently okay is Matic. Matic is still holding above this ascending, or holding within this ascending triangle above the 200. Lots of stuff on this chart, I know, but it's above the 50. It's above the 200. It's above volume. If it breaks 230 again, I like 3 to 4. Looks okay. Looks perfectly fine as far as a hold here. And then lastly, ETH had this nice and tidy rising channel here. October, November. November rolls around, everybody gets super bearish. Then we get this crazy range volatility that morphs into a multi-shouldered head and shoulders. Most recently, we broke that neckline. And the ultimate target here is between 3 and 3.6. Does that mean we're going to reach that target quickly? No, but that is the target for the pattern. You just take the high, take the low, measure it down. You get your fibs. Sometimes that lines up with other technicals, and we call that confluence. Certainly lines up with the volume levels and the monthly pivots here, but also not bullish. You can't get bullish on this when we're below EMAs. You could argue maybe bull div, but this is not something I would long at this level. I know a lot of people are happy for lower lows to get in, I guess, because maybe they were sort of out of crypto in October. But the problem I see here is that this looks collectively like it's more easily tipping towards bearish continuation than bullish reversal. So a whole lot of real good news this week for DeFi. But that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.